Welcome to The Explainer. Today, we're diving into an incredible business story, a company that is, well, just completely on fire. We are talking about V2 Retail, a fashion brand that's putting up numbers that are making everyone sit up and take notice. So, how are they doing it? All right, let's get into it.
Okay, let's just start with the number that caught everybody's eye. For the first quarter of fiscal year 26, V2 Retail jacked up its revenue by a massive 52% year over year. You know, in the retail world, that kind of growth, it's like finding a unicorn. It's huge, it's fast, and you gotta ask, how?
And that really is the big question we're tackling today. How on earth does a brick-and-mortar retailer pull off this kind of insane growth? Is it just a one-time thing, a fluke, or is there a real powerful strategy at play here? We're about to find out.
So here's how we're gonna break it all down. First, we'll look at that 52% growth spurt. Then, we'll unpack the V2 Retail playbook, their secret sauce, really. After that, we'll check out the results, see how they're planning to fuel the expansion engine, and finally, look at their huge ambition for the future.
All right, let's jump right into part one, that 52% growth spurt. We're going to go way beyond just the headline number to see what the whole financial picture really looks like. So that 52% revenue growth, that's just the beginning. The real story here, the thing that makes you go, wow, is that their profits are growing even faster. You see, their EBITDA, which is a great way to measure profit from the actual business, is up 63%. And net profit, up 62%. This isn't just growth for growth's sake. This is super profitable growth. The company is absolutely firing on all cylinders.
Which brings us to the playbook. How are they doing this? How are they generating these kinds of results quarter after quarter? Well, it all boils down to a really smart core strategy. First thing you gotta know is they are laser focused. V2 Retail is all about value fashion. What does that mean? They're not messing around in the big, crowded metro cities. Nope. Their entire world is India's Tier 2 and Tier 3 cities. They're serving this huge and growing middle class with a simple promise. You can get trendy, fashionable clothes at prices that actually make sense.
And what are people actually buying in these stores? Well, as you can see, men's apparel is the biggest piece of the pie at 41%, but it's really balanced. Ladies' wear and kids' wear make up the rest. This whole family approach is so important. It makes their stores the one-stop shop for clothes in town. Okay, now this is the secret sauce. The CEO, Akash Agarwal, said it himself. Their biggest strength is data. For every single item they sell, they're tracking 40 to 45 different things about it. Is a certain color selling out? Is a loose fit more popular than a regular fit? The data tells them everything. And they use that to decide exactly what to stock, where to put it in the store, everything. It's a super high-tech approach to a classic business.
So you've got this data-driven playbook, but does it actually work? Well, let's get to section 3, because the proof, as they say, is in the pudding. The results are in, and they speak for themselves.
I mean, just look at their return on equity, or ROE. This number basically tells you how good a company is at turning investors' money into profits. And V2's ROE has just gone parabolic. It went from under 11% 2 years ago to over 27% today. That's not just good, folks. That is elite-level performance. It proves their model is incredibly efficient and strong.
Now, here's a really interesting detail. Someone noticed that their average sales per square foot dipped a little. And you might think, oh, that's bad. But actually, it's a sign of their incredible growth. See, a brand new store does about 800 rupees per square foot, while an older, mature store does 1,100. Because they're opening so many new stores, it pulls the average down. But here's the kicker. Even the new stores are profitable from the day they open. They just haven't hit their peak yet. And if you look under the hood, the business is just fundamentally healthy. Same-store sales are growing at a solid 10%. And get this, a stunning 92% of their sales are at full price. That means no deep discounts to attract people. The demand is real. Add in 50% volume growth, and you see a business with some serious momentum. So all of this leads to the next logical question. What's next?
Well, Section 4 is all about how they plan to pour gasoline on this fire and really, really scale up. Just how fast are we talking? In the first quarter of this year alone, they opened 28 new stores. Think about that. That's about one new store opening its doors every 3 days. The pace is just relentless. Now, to keep this up, they're making a big money move. They've gotten the green light to raise cash through something called a QIP. All that really means is they're going to sell some new shares to big-time investors. But the CEO was really clear about this. They aren't doing this because they're in trouble. They're doing it from a position of strength to press their advantage while they're on top. So, what's the game plan for this new cash? It's actually a brilliant 4-step cycle. First, they're going to wipe out all their debt, making their foundation even stronger. Then, they'll use the rest to open stores even faster. At the same time, they're investing in the tech and supply chain in the background to handle all that growth. And finally, with more cash on hand, they can get better deals from their suppliers, which means more profit, which they can use for the next wave of growth. It's a complete self-fueling plan. And this all brings us to our final section, where the true scale of what V2 is trying to do becomes crystal clear. We're not just talking about a successful company anymore. We're talking about a path to becoming a true national retail giant. Just look at these targets. They're aiming to open 100 to 120 new stores this year, and then ramp that up to 130 to 150 next year. If you add that all up, they could more than double the number of stores they have today in just 2 years. It's just wild. And here's the grand vision, laid out on a timeline. Right now, they're in 21 states. In just 6 months, they'll be working in 25 states. But the ultimate goal? Within the next 3 years, they plan to have a V2 retail store in every single state in India. That is a truly national footprint. And that leaves us with this one big, thrilling question. The playbook is smart, the results are incredible, and the ambition is off the charts. But as they expand at this lightning speed, can they really maintain that data-driven precision, that operational magic, and that customer connection that got them here? Can V2 Retail really become the undisputed king of Indian value fashion? Only time is going to tell. Thanks for joining me.